Hi, this is Anne from StarseedFX. In this video, I'm going to share with you a quick guide on how to trade the AB equals CD trading strategy, combined it with the order block. Without further ado, let's get started. What does the AB equals CD strategy look like? Here's what the ABCD trading strategy looks like. In an uptrend market, you buy when the market creates a higher low. And in a downtrend market, you sell when the market creates a lower high. In this video, I'm not going to teach you about how to define higher low, lower high. There is a video for the basic of ABCD in the description below, okay? So in this video, I'm going to show it to you how to trade the ABCD and combine it with the order block. But this is the basic of the ABCD. You buy only when the market creates a higher low, and you sell only when the market creates a lower high. Now, let's see what the ABCD looks like in the real market. This is AUD USD. Why there is no watermark here so you can see? Okay, this is hourly AUD USD, and let's take a look. Where is the ABCD? Here, A, B, C, D, correct? Here, and then this is a lower high. Why? Because it is lower than the last high. Now let's see again another ABCD, A, B, C, D, okay, and another one like here, A, B, C, D. That is the big scale of the ABCD, the big movement, yeah, whatever you want to call it, is the big ABCD. Why I say that? Because ABCD can happen anywhere. If you consider this as your main structure, this is A, B, C, D. See, even though it is not exactly alike, but usually the CD lag is almost equal of the AB lag, okay? So by knowing the ABCD, you will look at the market different. Now take a look. This is the big structure, okay? Now look how amazing it is. If you want to trade on the not lower time frame, on the smaller structure, take a look at this. A, B, C, D. See? And then here another one, and here let's do it again, A, B, C, D. Now here, even though the market, the big structure is in an uptrend, it is still possible during the retracement you will find another ABCD that you can sell, like this, A, B, C, D, okay? Or here, this one as well, A, B, C, D. That probably failed because it's probably hit the A, okay? So what will make this ABCD fail? Only when A, this is A, B, if A is being breached by C, this is failed ABCD, okay? So this A should not be breached by C, but this one is working, okay? If you want to get a high probability trade, not high probability. If you want to get a higher risk reward, you will want to trade the big ABCD. But that is for the long-term trade, longer trade. But if you want to get a shorter term like this, A, B, C, D, that's also possible. But usually using the ABCD, now I'm still talking about the ABCD before the order block, okay? Usually if you trade the ABCD only without combining with the order block, you will get usually 1-to-1 or 1-to-2, 1-to-3 the most usually, you know. So to me, it doesn't matter if you get 1-to-1, or let's say not really 1-to-1, it's actually 1-to-0.25. So it's more than 1-to-1. That is the minimum, and I'm gonna show it to you later how, okay? First I want to introduce you the ABCD things, and then I will show it to you how to combine it with the order block. Now you already understand like how the ABCD looks like. You just can check it quick, skim the market, you know, and you will see so many of them, big or small. It's literally everywhere, like this, A, B, C, D. The lag between A, B almost similar to C, D. And here A, B, C, D, okay, A, B, C, D. A, B, C, D, A, B, C, D, and so on until the A is broken by, like for example, if you want to do this like this, look, this is an example that is failed, A, B, but this is broken, so this one is a failed one. So of course there will always be the failed trade. It is something that we cannot do. It's depend on the market. But if you understand the whole structure, okay, now if you want to do let's make it smaller, like smaller like this, and you will see how you can see the big movement of the ABCD, like this one, A, B, C, D. You see, if you understand ABCD, you see that the leg is over here, AB. You can let it go if you are trading the ABCD from the smaller time frame, for example, from here, A, B, C, D. Instead of getting 1 to 1, for example, over here, you can still get 1 to 10 if you know the big structure of the ABCD. But again, that's really up to you, but I just want to see it. When it comes to the ABCD and the structure, each person will see it differently, because there are so many ABCD, and you will be amazed how working so well it is. So now the first thing, recognize the ABCD. The number one thing is the break of structure. Once you see the break of structure, either to the upside or to the downside, that is when you can start looking for the entry based on the ABCD. Let's mark here. You see, even though this is a cherry picking, but you can mark it your own letter and prove it your own, that how easy it will be to find the ABCD. This is the breakout structure, right? Even if you see it is a downtrend, but there is a break of structure to the upside, and the market, when it breaks to the upside, the market usually give us higher probability to go higher, correct? And then now there is a pullback here. So what you do once there is a breakout, you will want to draw a Fibonacci between A and B. Okay, let me make this big so it will be clear to you. Now here, A, B, right? Because this is the break of structure, and this is A, the last low before the breakout, and then here after the breakout happen, you draw. So this is B. B is confirmed whenever there is a candle close below, lower by the last high, like this. I will explain this in the next video about how to understand the pullback, okay? But in this video, let's just say this is AB. Once you have the AB lag, when you see the market is already retracing down, you soon draw the Fibonacci, okay? The price, when the price is very strong, it usually hit only until 23 and then go higher, or 38 and then go higher. But I prefer to only enter a trade when the price hit at least at 50%. You may have heard that at the top is a premium zone, at the bottom 50 is this discount zone, right? So that is the idea of why you want to enter a trade whenever the price hit at least 50. Now here's how to enter the trade, okay? And there will be several ways, but in this video I will just tell you how you enter a trade based on Fibonacci and or based on the order block. Take a look. Now, long time ago in a video I said how to find the order block is that first there is a break of structure, okay, and then if it breaks above your order block is the last bearish candle. This is the bearish candle. Can you see that? This is the last bearish candle, and then so this is the order block. You see, so you can place your pending order here based on the ABCD. Now here's the thing using the ABCD. When there is AB equals CD, the price usually hit at least at 0% or at 27%. So you can place, this is your take profit 1 and this is your take profit 2 at minus 0.27 of the Fibonacci. You can adjust your Fibonacci like this. You can stop it so you see the price. I usually just remove the 23 and 38. I just have 78, 61, 50, and minus 27. And so this is how you combine it with the order block. So you do not barely just enter a trade when the price hit 50 or 60, but if, for example, you are not lazy, you do not have time, or you just want to take things easy, then you can just put pending order at 50% or 61% or 78. If I were to put a pending order based on the ABCD, I usually placed it directly on the 61% line and aiming at least this 0, okay? Because it's usually hit this one. It is not always hit 0.27, but most of the time, I said most of the time, it always hit 27. Like in this case, it hit, but it didn't hit the 61. Now let's say if I want to put it at if I place pending order at 61, once there is a breakout and AB is already confirmed, and then so I put the Fibonacci, and then let's see, this is my pending order at 61, okay, here, and then my take profit is here. Look, ratio is 1.6, more than 1.5. Okay, so this is probably not everyone's cups of tea, especially if you want to get like the order block that aim 1 to 10 or 1 to 20. But I'm telling you this, okay, a lot of people are trading the order block and they get burned out because they have to wait the very detailed requirement for the order block. But if you want to trade simple but still using the order block, this you can do based on the ABCD like this, or you can just put it in here if you think the market will hit your order block over here. You see, because there is also the FVG, fair value gap, or there is a gap, you know, over here between this and this. So that is how you combine it with the order block to aim to make some profit. And as per my experience, before I trade the order block, my husband and I was trading the ABCD for years. But then last time people are talking about the order block, it looks like, you know, king in the block. So I tried to make it, but right now I want to show you guys the easy way, because that I have so many feedback from people how become complicated the order block is with the inducement, with the every other rules, where basically you still can make money the simple way, like what I did with the ABCD, and now just combine it with the order block, the simple one. If you find an FVG or a fair value gap over here, the gap, you know, if you find the gap over here, so there is highly likely the price will fill in the gap and then continue higher. Now if you don't know, because sometimes, now let's see over here, okay, this is a big gap, but the price did not reach our order block here. Did it reach? No, it did not reach our order block. Okay, now I'm going to show it to you, this example. I will show you several examples, but first let's go back here. Okay, so if this is my order block, my order, and then if I were to put it at for example at 78, regardless what, in this case it hit, but it is not always hit obviously, but many of them would be hit, then I could aim still 3.7 ratio, you know, it's still really good. And so you can say like this: if you put pending order at 78 and your target is 0% or 0.27, you know that the average will be 1 to 3.7, and then if you put it at minus 27, it's almost 1 to 5, regardless big or small. Like I said, you can take the small one or the big one. So does it matter if I use, like, for example, several breakout? Yeah, it doesn't matter, big or small. It's really up to you, because you will see like big or small like this. Take a look. Like here, you said, no, this is sideways, not according to ABCD. Take a look, A, B, C, D, right? So now it doesn't matter if I want to put my low is here or low is here, it doesn't matter. Now I choose this low and this high. it failed to reach 27, but it reached the what is it, the zero. If I put it the breakout here and it come back, for example, because sorry, this is my A, okay, sorry, this is A, this is B. Can you see that? Look, this is A, this is B, this is the retracement. Now the retracement only reach only 50. Let's see here. Yeah, it reached only 50, barely hit the 61. Now if you choose, is this the order block? Hold on. If you do that before, hold on a second. Why is so difficult? If you want to choose this, no, it doesn't hit. You see, there's something that sometimes it doesn't hit it, because I always put, if I just do pending order at 61, I barely put, no, almost never put at 50% and directly enter. You see, whenever there is a breakout and I draw, I put it at 50. I don't do that, because sometimes something like this, I may choose this one and it look, after this I may choose this one, but then it hit the stop loss. So what I usually do, always put the pending order, if I don't have time, always at 61 or 78, or when I see a clear order block, then I just put it at the order block, okay? Because if you put it at 50% and then you target 1-to-1, obviously, and you targeted 0%, obviously you will get 1-to-1, because your stop loss would be at 0 in this case, okay? Here, and then here, sorry, 0 is only 1-to-1. You know, 0.98. Yeah, probably after spread or everything, it could be less than 1-to-1. So that is how the ABCD work. And now let's see again the big one. Okay, let's see. Let's do cherry picking here for the sake of example. Okay, here, this is the break of structure. I will see this one, not this one. I will see this one as the break of structure, because I want to take this low. Okay, so here, A, B, this is my B is over here, and the price goes to 61. You see, when the price like really big like this, it can be a little confusing. That's why when the price, if you take the big ABCD like this, you also will want to know if the price already break of structure to the upside. Like in this case, this is already happened, but then it failed, and then it makes again. Look, this is a small structure here. Okay, this is a small structure here, so you can create another I take this one, and then you can take another ABCD over here. All right, so instead of putting your stop loss at 100%, you won't put it 100% of the small one. Does that make sense? And then here your target is at 0 or at 0 or at 27. Okay, let's just say you only willing to take until 0, like until the last high of A. Okay, now take a look here. So look, this one is obviously this break of structure, and this is the order block, right? So let's say you take it at 60%, and then you are here, and then you take it at the last 8. This is what I'm talking about, where you take the small ABCD based on the scale of the big ABCD for taking profit, and usually it can make the nice return, like in this case 6 point something. But in the smaller scale, you still can take 1-to-1 and half, 1-to-2, 1-to-3. I mean, look, would you like to wait for 1-to-20, but in a very specific, detailed rule, like for the order block? I heard a close friend trader told me that sometimes they have to wait like over a week to get a very specific entry, like, you know, only once a week or nothing at all. But if you look at the ABCD, you are wasting the money. I mean, like, you're leaving the money on the table if you understand the ABCD. Look over here, A, B, C, D, A, B, C, D, even the smaller one. But try not to take really the small one. Like, try to take something like A, B, C, D that makes sense, at least where the Fibonacci hit the 50%, like that, you see. Like if this is, you consider this as the breakout, for example, okay, and so here this ABCD, A, B, C, always 60%, and then your goal is to reach 0 or minus 27, but most of the time it always hit 27. I personally like to reach only 0, but what my husband does, he usually take either the longer using the big structure, or he put the trade into break even when the price hit 0. That's what he does. Yeah, sometimes he hit the break even or nothing, but then when he win big, he win really big. But myself, I like to put it until 0, or if the price looks very strong, then I can let it to minus 27, because, well, you just can play around with the break of structure, you know, big or small break of structure, and then the retracement you use with the Fibonacci like this. Hold on, let me just do, because we are not going to use this. I don't use this, and I don't use this usually. I also don't use this. I just, so you can pause the video, and this is what I use, like that, you see. So this is just what I use. And if I were to trade here and here, okay, sorry, here, that is the breakout eyes. Okay, so this was the breakout. So this is A, this is B. Look, it's at 50, and then if I put it at 50, for example, if I were to put the pending order at 50, that my take profit must be at minus 27. You know why? Because I do not want to make only 1-to-1. Like if I put it at here at 0, then I will be just 1-to-1. No, I have to do it at 0.27. This is not really that difficult strategy if you are good in spotting the ABCD. Now our StarseedFX right now combined the ABCD with the order block, mostly like the ABCD, spotting the ABCD, the big one and the small one. So now you know how to trade it when you receive, for example, the alert. And if you want to join our community, right now we are having a big discount. You can click the link below in the description, and it's only one-time payment for a lifetime membership, and it's very, very cheap comparing to what you will get. So that what we share is that we share our ABCD. So once you get the alert from us, you have two options. But let's say we have the alert here. Oh, sorry, no, this is not, no, we are not going to send you the alert that does not hit the 50%. We will only send you the alert when the price hit the 50%. Like for example, like this. So this will be sent out. Okay, so here, the moment the price hit the 50%, you will get the alert from us. You have two options. You can look left, for example. Okay, that is the order block. Then you put the order, you can put at the 61, exactly at the order block. Okay, and then so you can put the what is it, the stop loss in here, and then aim 0, so you get 1.3. Or if you're afraid it will hit a stop loss, you can put it at 0%, and then you still get 1.5 ratio. See, this will be a high probability. But if you do not agree with the structure, because like I said, your bias may look a downtrend and then will give you a buy order block, is because when it comes to the market break of structure or breakout, it will always be subjective. But we will make sure to always send the alert that only hit the 50%. That will give you at least 1-to-1 and 1-to-1.27. You know, like if you are entering that trade. But of course, it could be wrong. Like for example, this is for the sake of example, we did not send this, but this is just an example. If we send this, for example, oh, this is our ABCD, and then it hit a stop loss. Okay, look, for example, this is our ABCD, because there is a break above, like here, this is a break of structure. So we thought this is our order block, and here is that, and then it become invalid. That also could happen, but it will save you time to looking for or to get the ABCD that at least give you 50%, and then you can look left if there is the order block, because I assume that you already know how the order blocks looks like and the rules of it. I make this video especially for members, so members already know what the order blocks looks like. If you are not familiar with the order blocks, you can go to our main channel and then just click the free course in there about the order block, the simple way or the advanced way. They are in the playlist. Let me show it to you. All right, here in our channel you can see either this one or this one. This is more advanced, but this is for very simple one. You can watch this for the ABCD strategy. And I would also recommend everyone who just very new to the ABCD to looking for the ABCD trading. Just search StarseedFX ABCD. Okay, here, simple trading strategy, the ABCD. So you can click this one. You just search StarseedFX ABCD. You will see this, and so you will know the very basic of how to trade the ABCD. So in the next video, I will explain about the ABCD pullback, and how to know when a pullback is done, and how to enter based on the candle pattern. It is more specific than today's video. So today just like an introduction how to combine it with the order block, but in the next week I will explain more about ABCD valid pullback and how to make money and how to pass a challenge account using ABCD trading strategy using the right money management tool. Because it doesn't matter big or small, by using the right money management tool, if you do not have the time, if you are not patient to use the big ABCD, because it may have it may take days to finish, for the big ABCD. So you just want to harvest the smaller ABCD but get the same result like the big ABCD, then I'm going to explain it to you next week. All right, guys, that is all for today. Talk to you next week. Bye-bye.